day. Kevin Green is with me, markets correspondent, taking a look at all these levels this morning. I mean, yesterday morning we saw the markets sell off dramatically and then claw the way back throughout the day to actually see some green by the end of the day. What are you watching now?
Yeah, well, as we just open up here, Nicole, you're looking at around 26% of the stocks in the S&P 500 in the green right now. We are being led by utilities, but that is really because of the Constellation Energy story, not so much a full-on defensive positioning when it comes to the utility sector. So we do have to keep that in mind and also kind of discount that. But if we're looking at the intraday levels for instance here, we're actually hitting a level right now, 59.40 to 59.45 is going to be a key area of resistance. And actually, if you kind of look at where we are at when it comes to the daily, it kind of makes a little bit of sense. The 59.70 area has been an area of resistance. We're still consolidating. We have this pinch taking place right now where the 20-day moving average is acting as an area of support, and we're trying to break through or at least get enough momentum to try to break through that 59.70 level. But the momentum indicators, the MACDs, RSIs are still kind of showing that we're losing participation, or the price action is starting to give way here a little bit, but the trend is still to the upside, as you kind of talked about. If we look at the intraday levels, 59.40 is going to be the first area of resistance that I'm focusing on. Once again, we kind of top tick that to start off today's session here. If we come back, collect ourselves, even hitting back to that 59.10, 5900-ish area is not a surprise. We've seen that as an area of resistance, but we are trying to base out for a breakout here. You can actually look at this inverse head and shoulders pattern that's really been developing since Thursday, where 59.43 has been kind of that area of resistance. And yesterday we did have a little bit of a breakout of that neckline, which is that white line here, which is bullish for now. So if we do have any type of a pullback, 5900, your first area of support, 58.85 negative gamma area, you'd like to see some buyers really trying to step in. And if we are able to have a follow through day here and break above that 59.40, I'm looking at 59.60 as your major area of resistance here for today. So once again, kind of coiling up, hitting a key area of resistance, but we do have the technical landscape. If you're looking at the lower time frame, the 5-day, 15-minute chart, you can make the case that the market is trying to break out and maybe try to test this 59.60, maybe even trying to hit that 6,000 level. I'm not sure if we're going to hit that today. That is obviously the big and next setup that we have for this market right now.
Yeah, look, I mean, people would love to see some key levels. Some of those levels are psychological or exciting or whatever you want to call them, but definitely notable. Let's take a look at silver. I was just noting gold out of favor today, down about $16, $17. Why is silver on your radar this morning?
Silver had one of the best days that we've seen in a very long time yesterday, Nicole, up around 5% if you're looking at the silver futures contract. Now, this is a 3-year weekly chart. The reason why I have my eye out on this, once again, basing pattern, had a cup and handle that kind of failed, broke below that 50-week moving average that's going to be in yellow here, but we're trying to hit that $35.15 level. And if we're able to break above, if you look at the high to low on this little cup and handle that was a failure here, that's around $5 and let's say 90 cents, 92 cents to be exact here. If we add that to the breakout level of $35.15, you're getting close to around $41.20, which would actually be fairly monumental. Now, you do have the MACD, once again, crossing in a little bit of a bullish formation at 12 EMA above that 26 EMA, and RSI is making higher lows and trying to break this lower high trend that we have there. So this is a very difficult commodity in order to try to squeeze to the upside, Nicole. A lot of short positioning when it comes to managed money and institutional flows. But if you're looking at the structural dynamics fundamentally, it's still in a deficit around the globe here. And it's really meaningful when it comes to technology. Around 90 to 95% of all electronic components in one way, shape, or form has silver within it here. So you do see some buyers really stepping in. The last thing that I will say when it comes to silver, compared to gold, silver is more of a economic growth story, inflationary story, rather than gold. And so you want to actually see this outperformance where silver is still outperforming gold. That gives you a little bit more confidence that the equity narrative can hold intact. And wherever silver goes, for the most part, when it starts to trend, usually we see technology and communication services follow here. So a very interesting technical setup. You do have some silver bulls that are out there, but once again, tough product to try to squeeze. You really got to break this one out in order to get those managed money flows to capitulate on the short side and really give you a lot more price momentum to the upside here.
All right, so wake up and check silver. to know whether or not you should be investing in tech. I love that. But yes, I understand what you're saying. I mean, we use certain parameters or metrics, and sometimes we see things trading together. Let's talk about what's been going on with crude. I mean, we're seeing crude creeping higher. I know OPEC's going to be pumping out more, which you would think that brings oil down, but you've also had geopolitical events, right? And so that brings in the question mark. So what do you think about oil today at 62.92 the barrel?
Yeah, you start to question here, is everything for the most part for the bearish side really kind of priced in yet? I'm not sure if that's going to be the case. I mean, you are still making lower lows if you're looking at this particular channel, but you are right. We had the OPEC meeting over the weekend. They are going to increase their quota. It doesn't mean that they're actually going to produce that amount. It's just the quota is going to increase. There's a difference that is there, but you did see oil actually holding up, and actually yesterday did fairly well. We also had some a conflict, obviously expanding when it comes to Russia and Ukraine. One of the bridges, the cursed bridge in Crimea, was hit earlier this morning as well. You saw oil catching a little bit of a bid. That $64 level is going to be a key area of resistance that you want to be able to break out of here, but it is trying to base out. Now, once again, we're still making lower lows, and that's something to be mindful of. If we go to diesel, once again, one of the offshoots or byproducts of oil itself, this one's actually a little bit more of a promising chart. I bring it up every once in a while, and the reason why it's actually very important because it's actually a key leading indicator when it comes to inflation, Nicole. So we had this descending channel that has been pretty much intact all year long since January 17th of this year, both the highs and lows being really respected, but you are starting to see higher lows here over the last, let's say, month and a half or so, and we are trying to break out of that channel, leveraging that resistance area as potentially an area of support. This is the one that can coil up and really react aggressively to the upside if we do have any hint of a trade deal or any hint of industrial production moving back to the upside, or transportation freight also gaining some traction here. Diesel is very tight when it comes to the inventory levels, and this is one to keep on your radar. If you look at the LA ports and the shipping data that's taking place, we are seeing a nice little rebound, Nicole. Now, that's obviously because of the pause in tariffs, but if that trend does continue, once again, diesel was one of the key input goods in order to transport freight around the world. So this one is an interesting one to be mindful of. Even though we are seeing crude maybe a little bit light when it comes to the price action, diesel or heating oil, whichever you want to call it, seems like it is coiling up for trying to break out to the upside here.
Right, and we don't cover diesel every day. I mean, it's an important story on how the world works, right? This, as the dollar has crept a little higher, a final quick thought?
Yeah, the dollar move is, once again, the dollar itself is going to be impacted by several different factors. If you have economic slowing that's being priced in, that could push the dollar to the downside. Usually once we get to a rate cutting cycle that looks like it's a little bit more predictable, dollar usually is moving lower because of the economic impacts that could be related to those cuts. And then you also look at it on a relative basis compared to other currencies. Now, are we seeing better economic data coming out of the Eurozone or the UK? Japan, probably not, but it's all going to be a relative on a relative basis here. If we continue to see dollar moving to the downside here, that could also boost commodity prices. That could also boost export demand. And if you actually look at it historically, given the right context, dollar moving lower is actually really decent, a really decent environment when it comes to equities as well. So I know there's been a couple of bearish notes this morning about the dollar can continue to move to the downside of aggressively. Let's see if that's actually going to come to fruition. You'd like to see a gradual move down, not an aggressive move down. And I think the market's going to be okay with that over the long term.
All right, Kevin Green, great to see you. Thank you so much. Appreciate it.